This is PropertyBT, a podcast of BT correspondents.
Recently, CapitaLand Integrated Commercial Trust, or CICT, completed the purchase of 50% of the Ion Orchard shopping mall and its connecting underpass. The agreed property value for all of Ion was 3.7 billion Singapore dollars. Half of that amounts to 1.85 billion Singapore dollars. CICT's manager said the deal is part of its strategy to capture the luxury retail segment in Singapore. It's a major move, one that signals the trust's confidence in the strength of Singapore malls. In the era of online shopping, it's a bold move. Singapore's malls may still be bustling, but for how much longer? Welcome to PropertyBT, a podcast of BT correspondents. I'm your host, Leslie Yee, Senior Correspondent. Every week, my colleagues and I break down a business subject that matters. Today, my guest is Tony Tan, Chief Executive Officer of CICT's manager. CICT is a leading real estate investment trust, or Reit. It owns predominantly Singapore properties such as office buildings, malls, and integrated developments. Today, we'll put Tony in the hot seat and pick his brains on the Ion Orchard investment, the outlook for Singapore's retail and office segments, and the future of Singapore REITs. Welcome, Tony.
Good morning. Thank you, Leslie, for the wonderful introduction. Very pleased that you invite me here. I'm happy to share whatever insights we have with the audience.
Thank you, Tony. Battling crowds during rush hour to get to the office, sharing gossip with colleagues at the pantry, all this seems to be very much the experience for knowledge workers these days. While technology enables remote working, Singapore's office buildings are hardly white elephants. Tony, why are Singapore offices doing well despite the remote work shift?
I think to a large extent, you can cut down into a few fundamental things that make Singapore as an office location very attractive. First of all, the supply dynamics. It was also quite clearly spelled out in URA that they wanted to really curtail the new land site in the CBD location for commercial purpose. So any new office stock likely come from older stock taken out from the market, redevelop, add on new stock. So that takes away a big chunk for asset owner like ourselves. Then the only thing to deal is really the demand, right? Demand side, you can see Singapore over the years has been highly recognized as a major financial center, transportation hub, business-friendly environment, hence attracted a lot of business interests to be based here. Second is the fact that Singapore is a small nation. So commute time is definitely a lot more convenient, supported by a very robust transportation network, So that also, I think, makes a lot more conducive environment to really look at a proper office setup.
Interesting, Tony. So obviously restricted supply, Singapore's position as a business centre, all this drives office demand. You also mentioned about the Central Business District or CBD being extremely convenient for people to commute to. Maybe I'll just pick your brains a little bit. Yet there are efforts being made to develop decentralised office locations, right? But then the big white site at Jurong Lake District, which has a large office component, was not awarded. So in your view, actually, how do decentralized office locations and Jurong in particular compare with the CBD?
I think this whole landscape will play out potentially over a longer period of time. Obviously, there are two key themes that's quite spelled out clearly by your URR master plan, right? One is certainly looking at more and more centralization of people living in downtown. So we're creating a lot more residential projects in a downtown location, including public housing, right? So that's one major trend. A second major trend, I would say, is a decentralization, which you mentioned, potentially moving some of the commercial activity out of the traditional CBD location. It's actually quite a clever plan if you are talking about, on the longer term perspective, having a more optimized use of very limited land resource in Singapore to increase capacity. You just have to rejig some of the urban planning. So Jurong Lake District is definitely one of the important locations where I think the URA authority, the planner, were hoping to catalyze and bring some commercial activity over there. So how that will plan out, I think depends. Economic cycle, obviously, one key driver. The overall Singapore ability to continue to attract even more type of services and production and cluster out some of the location that they have planned out across the island, that will take some time.
Yes, I guess we'll have to see over the longer term how all these plans to decentralize play out. For your group, you're just as plugged into Singapore malls as you are into Singapore office buildings. Retailers here often complain about high rent and manpower costs. Various food and beverage or F&B outlets have stopped operating. Singapore residents actively shop online and abroad, including across the Causeway. Tony, how have Singapore malls been performing, and what are the key risks in this segment?
So there is no easy job. To own and manage a retail assets, these factors that you mentioned is nothing new. For us, I think we have lived through cycles where consumer consumption pattern change. Today, I would say fast track, Singapore is definitely a lot more mature from a retail offerings perspective. But having said that, the consumer are constantly evolving. Demography is changing. I think that's where, as an owner, we have to be always on our toe, ensuring that every asset is pitched correctly. So annually, we look at our individual assets, look at how they should be positioned in the short and mid and longer term, given some potential trends are changing, whether it's e-commerce, shopping across the border, centralization of population, decentralization of commercial activity. All these will definitely have a big bearing on how we look at our asset. And some of the things maybe you already see, what we have rolled out, upgrading our Clarke Quay, full revamp, make it more day and night. Today we are upgrading IMM, intensifying our presence in the outlet space. At the same time, looking at our downtown offering, given that tourism, more influx of residents coming in, that will definitely shape the way we look at how we look at asset plan. So I would say the challenges are there, but it's also exciting because the retail scene and the consumption scene never changed over the last 15 or 20 years that I've been involved in this business.
Great. So obviously you're a very dynamic asset owner and operator, and I guess you have to be in the mall space. Food and beverage or F&B is obviously a top rental contributor for many malls, but many F&B players do suffer from high costs and intense competition, right? So will F&B continue to be a growing contributor to your malls?
I think F&B overall will be a very important component in our asset plan for individual property. Everyone needs to eat, and F&B spectrum is pretty wide. In the face of competition from whether it's e-commerce, social media commerce, attracting people to the mall is critical, right? So filling the stomach, kind of low-hanging fruit. Question is how you're going to bring them in. We've seen a lot of Chinese operators started to be very interested in Singapore market. So had interesting dialogue with few Chinese operators. They are very successful in their own city that they operate in or province. But under current climate, operating there has been very challenging. So Singapore is a respite. So getting into Singapore as a springboard, make their name known, but their plans are far wider. So I would say we will continue to focus. F&B is one of the main drivers for people to want to come to the mall.
Okay, let's look at your recent Ion Orchard buy, right? It's a trophy asset, obviously, right in the heart of Orchard Road. The mall has many luxury boutiques and is a prominent landmark. What is really exciting about this new acquisition? So
Ion is definitely a crown jewel in our portfolio. So Ion, no doubt, is very well known as a luxury mall. Actually, it's also a very universal mall. You go Ion, you don't have to just buy your Cartier or your Patek Philippe or Rolex. You can go down to your basement, you have your Uniqlo, your food court, different offering to all walks of life. And I think that's where the real story of Ion. Given the location, it is probably the number one spot for most of the retailer who wants to have their presence in Orchard Road. Us securing that is definitely giving us quite a good outreach to some of the space that we have not been able to reach out to, particular luxury space. And I would imagine over time, we potentially can see a lot more synergy between Ion and the rest of our retail portfolio in downtown.
Great. Tony, I guess the equities market gave CICT strong support in your buy of Ion Orchard. Retailers and shoppers will now be looking keenly to see how the mall evolves and contributes to efforts to make Orchard Road shopping and lifestyle even more vibrant.
Thank you. Yeah.
Still to come, how does Singapore as an office and retail destination stack up versus the competition? And Singapore Reits have had a tough couple of years. Are things starting to turn around? That's after the break.
been a fan of the podcast Mark to Market, Wealth BT and Property BT, they are moving to a new listing, BT Correspondence. Look for episodes every Tuesday from October. All the insights and analysis and market trends, property, wealth, and soon mobility too. Powered by the Business Times journalism of Genevieve Kwa, Leslie Yee, Ben Paul, and Darren Wong. Because great reads should be heard. The BT Correspondence channel. Find BT Correspondence wherever you listen to podcasts.
And now, back to PropertyBT, a podcast of BT Correspondence.
Welcome back to PropertyBT. I'm Leslie Yee. Singaporeans like to complain. Maybe many of us complain too much. However, there's little doubt that Singapore can be an expensive city. Will office jobs relocate to hungry and cheaper locations nearby? Might international visitors find shopping and dining in Singapore way too pricey? Tony, does Singapore offer good value for office space users? Is the shopping experience here attractive?
One of the comfort you can take away as an asset owner in Singapore is that the supply dynamic is pretty transparent, particularly if you own office assets in the CBD. You know that the supply is defined quite clearly in the foreseeable future. And the question is whether the demand will continue to come in. And that's where all the different attributes earlier we mentioned Singapore has today would play us in a good position. So I still feel we will be in a good position even 3 to 5 years down the road. Along the way, you may face headwinds, depends on how the world economic environment plays out. The Reits as a product, you probably know well that is very interest rate sensitive, right? The valuation of a REIT almost instantly affected by the outlook of how the interest rate environment will be like. And that has been pretty volatile over the last one year or so. But beneath that, I think those fundamentals of Singapore, from a property angle, it won't go away. And hopefully we will continue to, for us as in CICT, position our asset appropriately.
Tony, you obviously have expressed very strong confidence in the Singapore market, and obviously your trust is predominantly exposed to the Singapore market, right? So do you see your trust continuing to increase its Singapore exposure even more, or is there any thoughts in terms of perhaps getting a bit more overseas exposure?
We're going to stay predominantly Singapore for a long haul, that's for sure. This is a home gate, So as far as we can, we would want to continue to invest in Singapore. Invest could come in the form of new acquisition, if there are opportunity available. But at the same time, also looking at scaling up existing asset. Some asset may be redeveloped potentially. So that also gives us another growth driver to increase the footprint in Singapore. But having said that, we also always think that it's good to have a little bit of a outpost out there, not too big. We have 2 property in Germany, 3 in Australia. So we just want to balance and ensure that while we execute our plan in Singapore, we have other option avenue where we can bring additional cash flow stream to our unit holder.
Tony, earlier you mentioned that obviously REITs are very sensitive to interest rates, right? So the US Federal Reserve has been cutting interest rates, but we're not sure whether this story gets a bit complicated with the new Trump administration and whether the policies there are inflationary. At the same time, while you have great assets, there are numerous REITs that trade at much lower price to book and offer higher distribution yield than CICT. So simple question is this: is your trust fully priced, and how should investors with a long time horizon view Singapore REITs?
We are trading slightly below our book value. I think it's probably about 5 to 6% below book, thereabout. What attributes CICT has to offer to unit holder, and we have proven through our track record, has been stability and growth in the distribution and high level of liquidity. So it caters to quite a wide spectrum of investor type. We have investors who are in for quick bucks, but we also have investors who stay with us all throughout. We also see hedge funds taking long-term position on CICT. That says a lot. Liquidity is there, stability is there. Whether it's rightly priced, I can't say. Any interest rate change all the time. We can manage our capital structure to respond to how the rate environment eventually will normalize, right? The more recent divestment of 21 Collyer Quay is one action plan that allow us a good balance sheet position as we enter into 2025. So today, I would comfortably say that we are quite prepared come what may, Trump's policy, whether it's inflationary or just business as usual, I think we have good enough buffer room to continue our business of reinvesting into assets.
Yes, Tony, I think you referred to the recent sale of 21 Collier Quay in Raffles Place for 688 million Singapore dollars. So as a REIT manager, you obviously do quite a bit of buying and selling assets to rejig your portfolio. And indeed, some REITs have done well for unit holders by realizing capital gains from selling assets at good premiums to valuations. So in today's market, do you see more opportunities to buy or to sell Singapore office buildings and malls?
I think historically, if you've been tracking the real estate scene, particularly the commercial real estate, generally Singapore is not considered a very liquid transactional market. So you have a lot of assets, property that are owned for long term by their owners. So you don't get a lot in the market. So we will see if there's opportunity for us to explore. Definitely we'll be quite interested to look at it. But as a product type, generally we like a mixed-use integrated product. It tends to be able to withstand different cycles. So we own a few, including Raffles City, Funan, to a large extent, Plaza Singapore Atrium is integrated. So we'll continue to explore opportunity for that.
Do you see more opportunities coming along in 2025, for example?
I think the buy-side demand may pick up when you see rates come off with higher conviction. Today is a long shot, especially post-US election. There's a bit of a question mark how that would affect the capital flow. So I think it's early days, perhaps more clarity in early part of 2025.
Tony, it has been great learning from you on the opportunities, trends and challenges in the Singapore office and retail property segments. I wish you well in contributing to Singapore's success through offering spaces that meet the constantly evolving needs of users. Thank you to my guest, Tony Tan, CEO of the Manager of CICT.
Thank you, Leslie. Thank you for inviting me. This opportunity to share our thoughts as well. Thank you.
That's it for PropertyBT this time. Happy property hunting. Next week, BT correspondents will be back with an all-new episode on markets. So do subscribe to our channel and check it out. If you have any thoughts or questions about the show, email us at btpodcast@sph.com.sg. I'm Leslie Yee. As always, thank you for listening. See you next week.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.